Welcome to our Savvy series. I'm Catherine Magana here with Rachel Ivanovich. And today we're going to have a discussion on, are you investing or just afraid of missing out? So it feels like every few months there's a new investment that everyone's talking about. Maybe it's artificial intelligence, technology stocks. It could be a hot IPO. We just did a whole segment on IPOs. I know,
IPOs.
That's been a hot conversation. Maybe it could be a stock that's been soaring more than the rest of the market. It could be crypto investing. I know we haven't heard as much, but for a while, that's all we heard about.
That's true.
And so what happens is many investors start asking themselves, am I missing out? And so while the feeling of missing out is more of, it's more of a psychological feeling. And today we're going to discuss why fear of missing out affects many investors and how emotional investing can impact long-term success and what disciplined investors do differently when excitement begins to take over. So once again, this kind of ties into what we've seen over the last few months with the IPO markets and everything, that all the excitement. I know, a lot of excitement out there.
So let's begin with why investors fear missing out. So FOMO, or the fear of missing out, is really deeply human, and we naturally want to compare ourselves to other people. So if we hear that someone's making money on a particular investment, of course our brains go, wait, I want to be part of that. I imagine, what if I did that too? And then we think, what if I started investing earlier? And so the challenge is that oftentimes we just see the success stories because people really love talking about the winners, but they don't like talking about the mistakes. And you won't hear normally someone proudly discussing or posting about a stock that they bought that lost 50%, but you'll hear plenty about the winners and how they made a bunch of money, and it really creates this distorted view of reality. And it really makes us feel like everyone else is getting rich while we're sitting on the sidelines, and that's where emotional investing begins.
So one of the biggest problems with FOMO is that you start abandoning your process and the way that you work and your plans. And so instead of evaluating the opportunity carefully, you react on emotions. And so once again, what that might mean is you're buying high and selling low, or you're ignoring fundamentals. And so once again, instead of sticking to your plan, following kind of what you have in place, all of a sudden you want to jump in and jump out of these new opportunities, and you feel like I need to act quickly, and if I don't, I'm missing out on this opportunity. And so one of the things that happens with this is then now your expectations and maybe your risk is now changing for this one investment because you don't want to miss out. And so successful investing really requires patience and looking at not just the FOMO urgency, but really paying attention to, once again, what's my overall plan? What's my strategy? Now, we're not saying you can't do some of these things, or maybe a small portion, but perhaps being more thoughtful about what it is and what you're trying to do instead of just kind of erratically jumping in and jumping out of certain types of investments.
Looking at the whole picture.
Yeah.
So I guess the question is, why is the next company so tempting? And every generation does have the success stories. And today, many of the stories that we're looking at and hearing about revolve around AI, artificial intelligence, and innovative technology companies. And investors are seeing extraordinary growth potential, and understandably so, we want to get involved. And many of these transformative companies have created tremendous wealth over time. But the challenge is that investors often focus exclusively on the upside. And of course, you're imagining the next big hit, the next big wonder company. And so what we have to be considering is that for every massive success story, that there are many companies that never really meet expectations. And so that's why you have to, as an investor, separate your excitement about a company from excitement about the actual investment, because it's not the same thing.
Yep. So sometimes FOMO is easy to spot, and sometimes it's not. It could look like you're constantly checking stock prices. You're looking to see how it's doing. It could look like you feel frustrated when the markets rise and you're not participating. It can look like you see a big headline and it's doing really well one day, or comparing your portfolio to your friends, coworkers, or online. Or it could be, having that unrealistic expectation that it's going to go up, but the reality is it could go down in value. And it really starts becoming a matter of you start thinking, well, everyone else is doing it. I should be doing that too. But at that point, it's really the sign, slow down, take a moment. And I do want to point out the FOMO, it's not just investable assets in stocks and bonds and those types of things, but there's also real estate investing and buying homes and condos and outside real estate investments. And I think while those have different criteria, but they do fit in your overall plan and strategy and figuring out how does this tie in, not just trying to jump on every opportunity that comes your way.
When you see everybody doing it, you want to do it.
I want to be part of that. And so it's one of those things that taking a look at, what's your overall plan strategy and how does this tie in? The other thing I do want to point out is potentially if there is an individual position or stock potentially or investment, well, if you own, depending on what you're invested in, you might already be participating in that. You just don't realize it because if you're in a mutual fund or an exchange traded fund or some type of index or type of investment, well, inside the underlying investments, you may own some of these positions that you're asking about. So that's where sometimes looking at, let's take a step back and really see what are you asking and do you already own this as well?
And look at your plan.
Yes, exactly.
So disciplined investors, it's important to be a disciplined investor, and you understand something important when you're being disciplined. You know that you might miss some opportunities and you're okay with that because you have a plan. And no investor captures every winner. And no investor buys every great company at the perfect time. So you really need to be asking yourself, what's my plan? Am I having an emotional reaction here? Or am I sticking to my plan? Am I focusing on managing risk? Am I maintaining diversification? And like I just said, am I sticking to my financial plan? And you're really recognizing that long-term wealth creation is usually more about consistency than the excitement, even though it's fun to be excited. But you understand that avoiding major mistakes can be just as important as finding the major winners.
So the reality is that every investor may miss some opportunities, and that's okay. Or for long term, you might do some investments that work in your favor. And so once again, long-term investment isn't about picking one stock or one investment and that winning. What it's about is an overall plan, a strategy, and we think. What we're here is also to manage your risk and figure out, okay, you don't want everything all in one company potentially because of the concentration. But I think that fear of missing out is definitely a real feeling and it's there.
Thing.
Yes, and I think taking a step back, being patient, reflecting is very powerful and having a disciplined approach. And we're here to help, walk through and have those conversations because investing shouldn't create anxiety. It should really give you peace of mind and confidence that your plan's working, your money's working for you.
And that you have the right plan for you.
Exactly. And everybody's different. And everybody has, how much, they're willing, how much risk they're willing to take, how much growth. And
because it's easy to compare yourself to other people.
Yeah. And it's once again, it's designed for each person. So we covered, FOMO today. If you have any questions or if you would like us to evaluate your current situation or have these conversations with you, we're available for a phone call or a strategy session. You can reach us at 760-692-5700. And we want to thank you today for getting savvy with us about your finances. And remember to savvy up.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results, and the indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Savvy Woman Wealth Management is a registered investment advisor with the SEC.